Are you looking for a simple way to invest in the stock market? In this video, we are going to discuss ETFs, or exchange-traded funds, with a focus on sector-based ETFs to help you diversify your portfolio. So what is an ETF? An ETF is kind of like a giant basket of stocks or bonds. You can buy shares in an ETF just like you would a single stock, but you're actually getting a piece of a whole bunch of different investments all at once. There are all kinds of ETFs out there that track different market indices like the S&P 500 or the Dow Jones Industrial Average, but you can also find ETFs that are focused on specific sectors of the economy like technology or healthcare. These are known as sector-based ETFs. For example, if you're interested in investing in the technology sector, you could buy shares in a technology-focused ETF that holds a collection of technology stocks. This would give you exposure to a diverse group of tech companies all in one investment, rather than having to buy individual stocks. Sector-based ETFs can be a good way for investors to target specific areas of the market that they believe have the potential for strong growth. However, it's important to note that because these ETFs are focused on a specific sector, they can be more volatile and carry more risk than broad-based index ETFs. It's always a good idea to do your own research and carefully consider the risk before investing in any ETF. So speaking of sectors, did you know that the market is divided into 11 market sectors? In no particular order, they are information technology, healthcare, financials, consumer discretionary, communications services, industrials, consumer staples, energy, utilities, real estate, and materials. Now, let's talk about an ETF for each of these sectors. While there are many ETFs for each sector, I tried to focus on some of the more popular and liquid assets for this video. The first ETF we're going to talk about is for the information technology sector, ticker symbol VGT. VGT is one of the biggest ETFs on Wall Street with 374 total holdings. Many of the big tech names have come under pressure as the stock market struggled last year. However, it is difficult to dispute the potential of the companies in this sector when you evaluate them in years as opposed to months and have a long-term outlook. The top 4 holdings in this ETF are Apple, Microsoft, Nvidia Corporation, and Visa. The next ETF we're going to talk about is in the healthcare sector, ticker symbol XLV. Now, healthcare organizations continue to do well even when other industries struggle, making it arguably the most recession-proof sector that is most likely to weather economic downturns. That's because a visit to the doctor remains a necessity for millions of people who rely on treatments or medications. XLV has 64 holdings, with the top 4 being UNH or United Health Group, Johnson & Johnson, Eli Lilly and Company, and Pfizer. The next one is going to be for the financial sector, ticker symbol XLF. Now, the increase in interest rates has helped financial equities as it increases the margins they charge for loans to consumers and corporations. On the other hand, shares are also being affected by the possibility of a decline in commercial activity overall. Even if the short-term picture is somewhat uncertain at the moment, banks are closely linked to overall economic activity. So if you want to play a long-term growth patterns, then this financial sector ETF might be worth a look. The top 4 holdings include Berkshire Hathaway, JP Morgan Chase and Company, Bank of America, and Wells Fargo and Company. The next sector we're going to look at is consumer discretion, ticker symbol XLY. Now, with almost 60 holdings led by Amazon, Home Depot, Tesla, and Nike in the first 4 spots, this sector ETF, as you can see from the lineup, also offers a lot of variability within the sector, even though all the companies are plays on consumer trends in discretionary spending. If consumers dramatically cut back on their spending, the majority of these equities would normally suffer as a group. But the sector's diversification still enables the creation of an ETF that is rather well-rounded. Again, the top 4 holdings in here are Amazon, Home Depot, Tesla, and Nike. The next sector we're going to look at is communication services, ticker symbol XLC. XLC is a communication sector ETF that includes wireless data providers and infrastructure companies. There is not a lot of competition in the telecom industry, meaning XLC has a pretty focused list of just under 30 stocks. Even though the holdings list isn't very long, the fact that they are all reputable communications companies with steady income streams is a plus. Rounding out the top 5 holdings are Meta Platforms, formerly known as Facebook, Google Alphabet Class A and Google Alphabet Class C, Verizon Communications, and T-Mobile. The next sector we're going to look at is industrials, ticker symbol XLI. The industrial sector includes manufacturing and transportation stocks and has historically been a leading indicator of economic growth. XLI is the largest and most established ETF to invest in industrials. Top components in this fund include aerospace and defense giant Raytheon Technologies, conglomerate Honeywell International, and logistics giant UPS, or United Parcel Services, at the top of its holdings. The next one we're going to look at is Consumer Staples, ticker symbol VDC. In contrast to discretionary spending, Staples spending is rock solid regardless of the economic environment because people still need toothpaste, dish soap, and breakfast cereal regardless of whether the unemployment rate is heading up or down. With just over 100 total holdings, VDC is a great option to invest in this trend. Big brands like Procter & Gamble, Coca-Cola, PepsiCo, and Costco lead the portfolio, showcasing the kind of large and stable companies that are typical in the consumer staples sector. Next, we're going to talk about the energy sector, ticker symbol IXC. This $2 billion fund isn't the biggest, but it perhaps provides the best exposure to the largest energy stocks in the world via one simple holding. It has just over 50 holdings, and the top 4 holdings are ExxonMobil, Chevron Corporation, Shell, and Total Energies. The next sector we're going to talk about is utilities, ticker symbol XLU. Utilities are among the most steady investments available if you're searching for more continuous revenue streams. It is challenging for the business environment to change quickly because of the territorial monopolies that electricity, natural gas, and water suppliers frequently have, as well as the high baseline demand for their services and strict regulatory control. Including about 30 of the largest publicly traded utilities on Wall Street, you get plenty of stability despite a short list of holdings, and you'll also collect about a 3% dividend yield on top of that. Top 4 holdings in this ETF XLU is Next Era Energy, Duke Energy Corporation, Southern Company, and Dominion Energy. The next sector we're going to talk about is real estate, ticker symbol VNQ. The flip side of super stable utilities lately has been the real estate market, which has been hit hard by the economic uncertainty along with the rising interest rates that are taking place. However, VNQ is a diversified fund with more than 160 holdings that may be a good long-term holding despite recent volatility. It also pays a dividend of about 3%, and the top 4 holdings are Vanguard Real Estate Index Fund, Prologis Incorporated, American Tower Corporation, and Equinix Incorporated. The last sector we're going to talk about is materials, with ticker symbol for the ETF being XLB. XLB has more than $5 billion in assets. This ETF is an established and accessible way to tap into about 30 leading materials stocks that include industrial gas giant Linde PLC, Sherwin-Williams, which I'm sure we're all familiar with, and minor Freeport McMoran Incorporated. Just bear in mind that despite the fact that these businesses may benefit from rising material costs, any cyclical downturn that weakens industrial demand may provide challenges. So let's just wrap things up. ETFs can help you to diversify your portfolio at a reasonable price. Instead of investing in individual stocks, which may be costly and time-consuming, you can own a piece of many different companies all at once. I encourage you to start looking into some of the ETFs and stocks mentioned in this video today. It will help you get your feet wet as a beginner investor and get you well on your way to discovering more ETFs that you may want to invest in. I do hope this video was helpful and informative. Please drop a comment and let me know what other topics you would like to see covered, and I will see you in the next video.